You're still watching Power Lunch South Africa. In its financial year results, the Land Bank says that its total gross loan book grew by 4.3 billion rand, of which 2.4 billion was for development loans. The bank also says there was a strong uptick in loans from farmers, but it wasn't obvious how much of that was from distressed farmers or that there was increased appetite. Karabo Letlaka discussed the drought and in particular the effect on the Western Cape province, lending rates and lenders' threats that the bank faced last year with Land Bank CEO TP Nchocho.
The overall numbers of the Land Bank, I think, reflect two things. One, that towards the end of the 2016 year, there was a recovery in the agricultural sector as rainfall began to come back to the country to overcome the drought conditions that we were facing. And so what we saw was an uptick, particularly in the last half of the year, an uptick in applications for loans and therefore lending volumes coming out of the Land Bank. And as a result, that translated into higher growth in our lending volumes and therefore higher net interest income. And as a consequence thereof, the ratio of our expenses to our income therefore improved. But beyond that, we have managed to contain the expenses quite well.
You speak about the uptick in loan. That's also a sign of appetite, as it is a sign of distress. How much can I read the distress signs into those numbers?
Yes, you're right. Remember, the agricultural sector came effectively from a recession over the past 2 years. I mean, I think the estimates from the economic sectors is that in 2015, I think the sector was down by about 6% or so in the negative, and in 2016 was down by about 7.8% or so in the negative. So, but the crop environment really began to recover as the rainfall started coming back. And what we saw was an increased number of farmers planting their hectareage. The estimate is that about 15% or so of additional hectareage was planted, as 35% actually of the hectareage was planted when the rainfall came back. Hence, this year we are sitting with quite a bumper harvest with regards to grains. But it is a recovery. It is a combination of both companies that are improving their balance sheets, but also we are seeing a lot of interesting growth projects.
TP, back to the drought. Now, it affected different farmers in different areas of the country differently, but predominantly the effect has been largely felt around the Western Cape. The drought took farmers' ability to, use their stockpile, for instance, as collateral. That means that it's been harder for them to access funding, to grow projects, and the recent downgrades have not helped. How are you assisting farmers in this current environment of high returns? I mean, even your interest rates, are sitting at 10.5%, if I'm not wrong. How are you assisting farmers during this time when there isn't a lot of collateral to come by?
Couple of things. You might recall that during the course of last year already, in the height of the drought, we introduced a 400 million rand concessionary drought relief scheme. That particular scheme has come in handy. And a portion of it has been drawn. But remember, it is difficult for farmers to draw on the funding when drought conditions are pretty severe. So the scheme was utilized to the extent of approximately a third or so. What we have done in June now, we have extended that particular scheme to the drought hit areas of the Western Cape. So that facility is available. But what we should remember as well is that, farmers do have ways of coping with drought conditions. People have mitigation arrangements in the form of boreholes and other storage facilities. The third facility that we offer, obviously, is the risk cover that comes through our subsidiary, our risk insurance subsidiary. We have a company called the Land Bank Insurance Company, which offers short-term as well as life insurance cover for farmers. And what we have seen over the past year is a significant uptick in the claims rate and the payout in that regard. So we hope we have made a contribution.
It would be remiss of me not to mention this. You are one of the largest lenders in this sector. You account for about 30%.
Correct.
One of your lenders, Future Growth, threatened to pull funding last year based on governance issues at the state institution. What kind of improvement have you made with regards to your lenders? What are you telling them now? What has changed at the land bank?
Yes, no, fair question. First thing to mention is that we engaged with Future Growth in order to demonstrate to them how our lending and other governance processes and credit risk management processes work. We spend time with them clarifying issues.
Have you had to change anything to appease your lenders?
We have had to make certain improvements to the things. For instance, one of the things that I recall vividly was that they required certain more disclosures in terms of publicizing such policies on our websites and so on, so that there's greater transparency. In the second instances, they requested certain enhancements to our credit decision-making structures in the form of more numbers of people who are non-executive and are therefore independent in the decision-making processes. And you might recall, actually, the Land Bank was the first institution that Future Growth came back and said, yeah, these people have their act in order, and we will continue lending to them. And as a consequence, we have had a very, very, very good year in terms of raising capital in the markets. In excess of 7.7 billion we were able to raise just locally, in addition to the facilities that are loan dated that we raised from the World Bank, from the African Development Bank, and so on.
That was Land Bank CEO TP Njocho in conversation with Karabo Letlatla in here on Power Lunch South Africa.